Hello and welcome back to Bunnex Investment Group. In this video, we are going to talk about a very powerful US session reversal trading strategy. So this has been inspired by Steve Mauro, and we are going to talk and highlight all the concepts that you need to follow in order for you to catch the rightful trading points. On that note, without wasting much of your time, let's actually get into the content. So what you see on my screen is actually there are several boxes, and for the sake of those who haven't come across this particular template, the blue box marks the Asian session range, and then these yellow lines are marking the upper and lower bands of the Asian session, and then this one the middle band of the Asian session. You can as well see these gray areas. These are session changeovers, a period from end of the Asian session to London session. Therefore, we have this period as the London session, and these red boxes are the US session, and this gray area as well is actually a session changeover from the London to the US session. So the London session is the area or the region in colorless. It doesn't have a box on this particular template. So how are we going to make our entries for the US session reversal strategy? It's basically a strategy whereby we need to see a London session that is two higher highs, right? So the London session must present two higher highs for us to get a reversal in the US session. So basically this is the template that the London session must present. So we are saying out of the Asian session box, we need to see this particular template for us to anticipate or for us to get a reversal in the US session. This must also be done by actually seeing break of market structure twice, whereby we are saying this was actually break of market structure at this point and another break of market structure at this point. So if it breaks twice, it means in the US session we'll have a reversal with high probability. So on this particular example, we can see this Asian session, we had this range, and then the market went outside the bands, went outside the Asian session range, and from there we had the first drop, and then we had the first break of market structure, which is this one, then the second drop, and then the break of market structure for the second time. And in the US session, we had this candlestick reversal pattern, sort of a railroad track of the bodies of these candlesticks, and we had a reversal. You can see the market actually went in our direction. So for us to have, or for us to fully understand and comprehend this particular concept, we need to have several examples, and that is what we are now going to do. But before we do so, please check out our free Telegram channel. I will leave the link in the description box below. All right, so we've said the London session should present at least two higher highs or two lower lows depending on the market context, and in this particular case you can see the market actually gave us this Asian session range. After that Asian session range, the London session had the first rise, break of market structure here, the second rise, break of market structure here, and in the US session we had a beautiful bearish engulfing pattern. So we had first, second, and third move or swipe to the high until we reach the US session like that. Then let's have more examples. This was now USD CHF. We can see this was the Asian session range, and after that Asian session range we had a London session where we had twice break of structure here, right? Break of structure here, or 1, 2, and 3. And in the US session we had a beautiful bearish engulfing pattern at that point, and the market went to the downside like that. Then here we also had a London session that mimicked what we are looking for, or that had the same template that we are looking for. This was the Asian session. Market went outside the Asian session range. It went back down. First drop, break of structure, right? second drop, and then third drop, and at this candlestick reversal pattern, which is a railroad track, and the market went our way. Then this was USD, Euro GBP, sorry. On Euro GBP, it was a bit clumsy, whereby we had Asian session range, right? The London session had the first rise, break of structure, second rise, break of structure, and in this US session, that is where we were going to make our entries to the downside. Break of structure, but if it's clumsy and you do not see clearly what you want to see, it's better to skip that particular entry. So basically, that is what we'll be looking for. In some cases, the market will actually issue something like this, whereby there is no clear breaks of structure that we wanted or that we intend to see. It means it's actually a skip, right? So as I always say, before you try a strategy on a real account, you need to backtest and understand how it works and how it goes. On that note, we've come to the end of our today's video. I'll see you in the next one.